takes 5-10 years of lot of losses and a lot of time wasted before they realize that we are going wrong.
There are traits of successful investors. And I'm sure in many of your other podcasts you would have had covered it. But,
Are we different from other world markets? Let's say you compare it with US equity market.
I think SEBI is taking very proactive steps in recent times. If you just put that wealth in a simple mutual fund product, what keeps you motivated in terms of, at the ground level?
Hello and welcome everyone to AUM Finance Podcast. This podcast discusses the first principles of investing and is for informational purpose only. We intend to add to the body of knowledge. Please consult your financial advisor before taking any investing decision.
So Saurabh, many of my clients say you are doing your own direct equity. I do it in India and US. And I do it because I am only answerable to my wife, as Rakesh Junjula keeps on saying. And say, why don't you give us your suggestions on our direct equity? I said, see, I don't want to reinvent the wheel.
Yeah.
There are manufacturers like you. The mutual funds are, this food chain is such a beautiful food chain.
Yeah.
You all are the manufacturers, we are the distributors, and then there is an investor. So I take investor's money, he has faith in me. It's a fiduciary relationship between me and them and you and us. And I have 44, 45 mutual fund companies, 2,000 odd products to choose from, and I can easily exit from X to Y if I feel you all are underperforming or not doing a great job. Who am I to tell myself? And that I have to think whether I should be managing my own direct equity portfolio beyond a point, which is a smaller portion, to say that with the kind of team you people have, and we'll talk on that, how is a mutual fund company structured. I mean, you would be having a team of 20, 25 analysts and fund managers with how many man years of experience, God knows. Why am I to say, why do people keep on going to direct equity?
Sure.
And especially people who suddenly get a windfall. And they say, we can kill it with our own money. It takes 5-10 years of lot of losses and a lot of time wasted before they realize that we are going wrong somewhere. Please throw some light on that.
No, you can get into direct equity if you understand it.
Yes.
But that percentage is really, really low and minuscule. So for you to assume that I'm, on the other side, which will succeed is, I mean, the odds are stacked up against you if you're not into it full time.
Yeah.
I think, there are traits of successful investors. And I'm sure in many of your other podcasts you would have had covered it. But, understand market cyclicality, having patience, sort of just being disciplined about your investments. I think those are very critical parameters. If you don't have even one of those qualities, then it will be trouble. It will be trouble for you, and you won't get a good outcome.
But why do people get that feeling that we can do it? That's a dilemma I keep facing.
Unfortunately, I also feel it's a consequence of how our own market is also structured.
Okay. Are we different from other world markets? Let's say you compare it with US equity market, how are we different?
I really don't like the percentage where your cash trading is 5-10% in the market and 90% is F&O.
So you are saying the total trading volume at any given point of time on the Indian stock market, only 5 to 10 is cash trading.
Exactly.
What normally we do,
Exactly.
what we should do.
Exactly.
90-95% is speculative.
Absolutely.
In the form of futures and options.
It's a ridiculously large percentage.
And what's wrong with F&O?
Globally, that number should be 50-50.
Okay.
According to me, whether there is a good balance between the two. I think the way the market is structured, having these F&O options, single stock options, single stock futures, and just that greed that of taking that leverage and doing it, I think perhaps is leading people to that. I think SEBI is taking very proactive steps in recent times, as well as many other counterparts. The market players are taking very proactive steps in terms of uh, educating investors, telling them about market statistics that look, hey, market went up from a low of 7,000 to 20,000, but during that same period, 90% lost money in FNO. It tells you a story, right? That
In a rising market, you are losing money.
You have
Oh
lost
dear.
money.
Oh dear.
That itself is such a strong statement. So they are taking all the efforts, but I think if we can really, at a policy level, think through the market structure at this point of time, this ridiculously small cash portion and a large portion in FNO.
Yeah.
And if we can tackle that, I think it'll be far better for the structure of the market from a long-term perspective.
See, I have clients, children coming to me, teenagers, and saying, I do only FNO.
Yeah.
Okay, so that is only speculation, very
Exactly.
much against the basic principles of investing. And I have I have developed a code that if you do an FNO, you'll neither have a future left nor any option left. In my
No,
demat account,
my big worry, I see a lot of clients.
huh,
They have come up the hard way. They were lower class, middle class. They worked hard. They reached a point. They succeeded in life. They have made their money in their business or in their profession. And very unfortunately, the minute the kid passes out and they put him to manage his wealth, and that's where I see
Yes,
that
yes.
this is a very wrong step you have taken.
yes,
Because on its own, if you just put that wealth in a simple mutual fund product,
yes.
it will give you a far
let it
higher
compound
return.
over 10,
It'll
15 years.
compound. You don't need somebody else to be managing it. Let him follow his career. Exactly what you have done in your life.
Yes.
In terms of rising
Yes.
and succeeding.
Yes.
Allow him to do that.
Yes.
Let him go through those motions.
But they don't want the slow grind. They don't want the slow grind and fast money. Say, in my seminars as a financial coach, if I ask them, what is the first car you want?
Yeah.
You know, that has come from 5 lakh to 20, 25 lakh. And if I tell them, see, if you listen to my advice, we can endeavor to get a Merc in 10 years, 15 years. They say, 15 साल बाद किसको चाहिए? मुझे कल चाहिए. Now, what do you do with that kind of a mentality? Fast money.
I mean, look, if they listen to you, great. If they don't, then you will know their outcome in a year's time.
Yes.
Where 90% of them fail in that sense. See, it's very human, even when you have a direct stock portfolio, to talk about only the scripts where
Which
you have
have
made
done
money.
well. Yes.
And which is a very small portion.
Yes.
You don't talk about 90% of the portfolio which has lost money.
Yes.
But you will always talk of the 2-3 stocks which have made you money.
Yes.
The simple question is, how much of your wealth or assets have you put in those stocks?
Yes.
So what is your overall
Does it
aggregate
make a
portfolio
difference to your
return?
net worth?
Exactly. So look, I think a lot of us go through these cycles. Yeah, it's you can really keep it simple. Just be disciplined and just be patient, and you will see the results, compounding in 10 and 20 years.
Saurabh, do you think
such levels that you would have not dreamed of at that point of time.
Yes.
The other thing I always tell my investors is focus on your business and career first. If investments start taking more than 10% time, it's a problem. You're not doing the right thing.
There are many people who have lost their job because during working hours, they're looking at the trading tunnel.
Yeah, it's
Whether
completely
you are a
wrong.
techie or in pharma or any other field.
Your core asset is your business or your career.
Right.
That should keep on earning, you money.
Yes.
Focus on that, rise in the ranks and succeed in life. Investments, give it to a trusted advisor. Keep it simple. That's it.
Yes.
There's nothing more to it.
Yes.
You don't want a trusted advisor and you just want to put it in an index fund, do that.
Right. Right.
Just keep it simple.
Yes.
If you are going to lose your night's sleep on your investments, then you have made the wrong investment.
And days work.
Yeah, then it's
Because that urge to check every often, Okay. You see, in my to my clients, I've stopped giving them apps, and I used to give them 10 years back. And I said, if you're giving me 5, 10, 15, 20 year money, that if I give you an app, that will be that to check it every day in the
Yeah,
morning, and
yeah.
one day you're going to act on it.
And you'll act on it at the wrong
In
time.
at the wrong time. The
At
possibility
the
of
wrong
you
time.
doing the right action is very less.
Absolutely.
So, will you throw some light on real estate and gold, the two physical asset as an asset class? What's your experience been over the decades? There also there are many.
So look, gold is more insurance than anything else.
Okay.
Yeah, if shit hits the roof, at that point of time, gold is the most. It's like your second currency. So to that extent, I think, and especially in Indian families, the asset allocation will be skewed
Towards real estate and gold.
towards real estate and gold, relative to what I see in other countries. So it's far more. Gold has its place. Understand its place. If you can also enjoy wearing it and using it, great. You will get the best of both worlds. So you're using it,
So, Saurabh,
and it's your insurance also. Can it be 20, 30, 40% of your portfolio? No chance. You shouldn't.
gold.
Yeah. Okay.
So, where do you cap it? 10, 15%.
It really depends
Which
on you.
for every household would already be the case.
It will already be the case. So don't go beyond that and use it. Have fun with it. Recycle it. Your design has got old. Recycle it. Make a new design. Make a new
But
ornament.
every time you visit a jeweler, because of the making charges, because of the buying and selling price difference, so I joke in my seminars that why is jewelry not an investment?
Yeah.
And I say, see, you buy jewelry for your wife, 5 years later the price goes up, doubles. Can you dare to tell your wife, give it back, I want to sell it? It's a one-way street. So
No, so that's why I just say that enjoy it. If your wife becomes happy, this thing wearing
you're buying
it,
peace at home.
it's great. Look, let somebody else enjoy it and feel happy about it.
And the gold that we keep in our, from an economic perspective, the gold that we keep in our lockers, so we are not circulating that money.
Yeah.
Is it impacting the economy?
It definitely
Negatively?
does. It definitely does. There's no question about it. But look, I just feel,
It has saved us also many times.
yeah, see, there's no right or wrong. Just because, US economy has grown in a particular way doesn't mean that that is the right model. I mean, the primary principle I have for investments is it should give you a good night's sleep. If it doesn't give you a good night's sleep, then there's a problem. You can be 100% debt investor, but you have enough of savings. You don't want to go through that highs and lows, the tensions or whatever of the market cycle. Nothing wrong in just keeping it in debt and earning on that.
So to each his own.
To each his own, understand your profile and go ahead. So let's get back to your question on real estate and gold. I think the thing. So gold is, as I said, insurance. If you can use it, nothing like it. Real estate is an asset class with very long cycles.
Very long cycles.
Very long cycles.
Long bear cycles, long bull cycles.
Both.
Okay.
So I don't know about the other parts of the world, but if I would just have to look at the Mumbai markets or even the Indian markets, I think you had a period from say 92 to 2002, a 10-year period where prices did not move.
92 to
2002.
in Bombay, in India.
Yeah.
92 to 2002. Okay.
They wouldn't have given you great returns.
Okay.
2003 to 2012, virtually everything went up like 5x, 7x, 10x. If you would hold a plot of land, it would have gone up, even more. So you had another, 2000 set of 3 to 12, a 10-year cycle where it just made a lot of money. You then again had a cycle from 2013 to 2020, COVID, where
Real estate didn't do anything.
real estate didn't do anything. And again, last 2 years, it's coming back up again. So It has very long cycles. Again, if you can use it, so you are basically, invested it and you are using it either for your own profession or staying in it.
That's
nothing like it.
Right. That's an expenditure.
Yeah, nothing like it. It's important in such long cycles. If you can get the cycle right, it's great.
Which is easier said than done?
Very easy, this thing, easier said than done. It's also extremely complicated. Try and sell a property and how much time it takes, the paperwork involved,
friction charges.
It's a huge this thing. So it's nowhere as simple as a mutual fund product where you just sign on one place and tomorrow, the next day, the money is credited to you.
And the risk of getting stolen or getting somebody capturing it.
Yeah, the only thing, there's an emotional side to it, and I think that emotional side somewhere plays a larger role in real estate and gold for investors because they can see it.
Yes.
So yeah, this is a house I have, or this is an ornament I have. They can see it, and therefore that it just
touch and feel it.
Touch and feel it. Whereas I can't touch and feel a unit of a mutual fund.
So Saurabh, this is how I explain to my clients. See, you have a mutual fund scheme, XYZ mutual fund scheme. Let's say Invesco Flexi Cap Fund. You have 40 stocks. Now I say these 40 stocks are living, breathing entities.
Yeah.
Go and see their plans, right?
So look, my limited point is I think real estate is an asset class. Expect stable returns over longer periods of time.
So, long would be a decade and more?
Yeah.
And this one aspect I wanted to clear from you. Normally, 99% in India, you take a real estate, you take a loan.
Yeah.
You take a loan at almost a floating rate, but then it is in a range. So you leverage it and you do it.
Yes.
If you hold it for 10, 15, 20 years, then it multiplies.
Yes.
Whereas if I go into equity, normally we don't suggest taking a loan and going into equity, even in mutual funds. So does that angle work?
No, leverage definitely will work, and especially if it appreciates, then your returns will be higher in that sense because you have only put in 20 rupees equity and 80% you have taken a housing loan. And if the prices move up, then obviously your returns are higher because of that leverage. It can work the other way also. In that sense. But as I said, it's at times real estate does come in from an emotional aspect, getting that good night's sleep. That hey, I have a property, I have a roof. Tomorrow, if I die, my family doesn't need to go.
So let's say we rephrase the question that you already have a house.
Yeah.
If you don't have a house, nobody is debating that, and I'll differentiate it from investments. You have a house. Let's say you have two houses. You have an office also and a house also. Then you are buying it as an investment.
Then you're buying it as an investment. I think the best this thing should be a REIT or an InvIT. I think those products are coming up now. In
a real estate investment trust and an InvIT product
would be far better off than actually buying the house and maintaining
there again,
it and having a friction
using
cost.
A leverage.
Leverage is
double-edged sword.
Yeah, it's up to you.
So, Saurabh, time for turntable. So, if you have any questions to ask.
What keeps you motivated in terms of, at the ground level when you have clients fundamentally wanting to, ask you what is the market today? How do you think of investing with a very short-term view? What keeps you motivated to yet keep on, going through this kind of a due diligence on asset management companies, their processes, and trying to convert clients to understand that long-term story?
Okay, wow. So I am a Buffett fan. So
Okay.
every Tom, Dick and Harry will tell you that, but I am a true guru. I have taken more than 120 seminars on Warren Buffett's style of investing. And as Warren Buffett, my guru, says that I am wired differently. So am I. So one, I see ki, you get afraid or you get scared if investors are asking you a question if you don't have that conviction. So I have a conviction. Conviction cannot be borrowed. It cannot be given to somebody. I have that conviction myself. And when I talk to clients, that conviction shows. Second, when a prospect is becoming my client, I don't paint a rosy picture. I paint a very negative picture initially. And I say, for 2 years, we will not talk now. 18 months, 24 months, we will not talk. And I'll take your portfolio in such a way that you will have a tough time in the first 2-3 years.
Wow.
And once the third year and the fifth year crosses, then you will see prosperity in your portfolio. So if on day one I have tutored my client in that, because it's a 5-year, 10-year, 15-year cycle. So I said I've stopped giving apps. So out of my 1,000 clients, only 15 have apps.
Okay.
That too, they put a gun to my head.
Wow.
I hope my clients, when they listen, because if you have an app, you tend to, it's a very short-termism. See, that is where the world is going. सुबह उठा 3 में 4 बार अपने app check
Distraction.
किया. Distraction हो गया. So equity is a long-term asset class, and I am a firm believer. I am 120% personally invested in equity.
Nice.
So with 20% leverage, but in a very proper, methodical way. I don't know last 2 months, Saurabh, I don't know where the market is.
Sure.
Believe
Great.
it or not.
Excellent.
I've been busy in the podcast and all, and how does it matter? All the money are 5-year, 10-year, 20-year money. So that is where, and motive, I think, what an asset class equity is. I believe there are 4 great inventions in the world of money. One was the invention of the joint stock company.
Okay.
Second was the invention of the stock market. So invention of joint stock company allowed an entrepreneur and businessman to take funds from the surplus and share the risk, right, and share the profits.
Yeah.
Then stock market came. So people who are not close to that guy now could buy the share.
Yeah.
Imagine I buying a share, let's say for example an Apple there. I bought a share along with Warren Buffett in TSMC, Taiwan Semiconductor. The companies, if I buy a share in Reliance, Mukesh Bhai is partly working for me.
Absolutely.
What a passive asset class. So that passive, why you have to work for the rest of your life.
Yeah.
There'll be a time when you say, bye-bye, I want to enjoy life.
Yeah.
So that art of equity gives me that kicker.
Excellent.
Mutual fund in India, I believe, is one of the, as I said, is one of the best food chain I can think of. I hope we never disturb that.
Yeah.
You all are doing a great job. We are doing our own job, and the investors, when they're trusting us, and now we are seeing we can give a fight to the FIs also.
Absolutely.
With the SIP money.
Absolutely.
I think 5-10 years down the line, we can say bye to them.
It was a one-sided market at that point of time.
Yes. So that keeps me motivated, and sort of, if by reading, only by reading, I can make money. Equity allows me that. You
make it sound simple.
No, but if you have the right approach, in fact, I'll tell you, I bought Bajaj Finance 12-13 when I recently met Rajiv Jain. I bought it 12-13 years back.
Right.
And every week I meet a fund manager, and I would take a poll, rakhu ki nahi, sir bahut महंगा hai, koi bolta hai nikal jao and all. Fortunately, I only did upward buying.
Yeah.
So that some wiring was there inside. I bought it after doing a research from a Nagpur to Bombay flight.
Excellent.
Only so something triggers. Even Warren Buffett says it's not that he's been reading all along all these annual reports, and he's arrived at a position where a 10-minute. So there are certain, the analysts and fund managers in all the AMCs, they do too much quantitative work according to me. उसमें उस डिटेल में जब आप गोथा मारते हो, तब आप जो क्रक्स है वो भूल जाते हो. And it is an optimist guy's investment.
Sure.
And if not in India, where will you buy equity? If not in US and India, where will you buy it? So that gives me a kick. I am passionate about that subject. Or annual report पढ़ के और presentations सुन के और business में, I'm a big student of business models. I love it. And now I've expanded it to all forms of equity, right from angel to unlisted to listed to public and everything. And it is like I just interviewed a startup, and they had approached me 7 years back, and I said no to them, and now they've become the biggest guy. I mean, if I would have been 20x, 25x by now.
Sure.
So you need 5 such breaks. That motivates me.
Excellent.
And that reflects when I have I believe in the product. I believe in mutual fund industry. I believe it is a very democratic product. I get happy when the commissions go down, because it is good for my client.
Yeah,
somewhere I am also an investor.
Absolutely.
So I mean, and it is a heavily regulated. Madhvi is doing a great job.
Absolutely.
That ma'am,
Ma'am is
right? She's doing a great job. She was my super senior in ICICI Bank.
Excellent.
Right, and we are protecting the investor like I think no other country is protecting. So that motivates me. It was a long answer.
So clearly equity is your number one thing. But
Yes.
if at all you have to go to any other asset class, what would it be and how would you rank them?
No, only if somebody puts a gun to my head. I am in.
So I am putting a gun to your
You're
head.
putting a gun to my head. equity in all its form, I'll experiment. See, the maximum I put money in a debt fund is 1 month. Okay. I cannot. But then COVID, I got scared a little bit for 8 months and all. I didn't do any selling either for me or for my clients at that time. And only 5 out of 1,000 clients left me.
Oh, wow.
Okay.
That's a great number.
I didn't know whether it'll go up, but I told my clients कि distress selling कभी नहीं करते.
बराबर बात.
आप मजबूरी में बेचोगे तो लॉस में ही बेचोगे. मार्केट 2 साल में रिकवर हो, मैंने 3 साल बोला था कि 3 years में मार्केट वापस आ जाएगा. पैसा है तो डालो. नया इन्वेस्ट करना कि नहीं मुझे नहीं मालूम, बिकॉज इट वॉज अ बायोलॉजिकल क्राइसिस. आई हैड हर्ड कि वर्ल्ड वॉर के पहले भी किसी ने इन्वेस्ट किया था तो 4 साल बाद वर्ल्ड वॉर के बाद यू मेड मनी. आई हैड दैट डेटा. आई डिडंट हैव अ डेटा ऑन एन एपिडेमिक. या तो लास्ट
इट वाज द फर्स्ट फॉर ऑल ऑफ
लास्ट एपिडेमिक हुआ तो स्टॉक मार्केट नहीं था. तो स्टॉक मार्केट के इन्वेंशन के बाद ये फर्स्ट एपिडेमिक था. उतना मुझे पता था. तो इवन इफ यू पुट अ गन ऑन माई हेड ओनली फॉर अ कंटिंजेंसी, लेट्स से नाउ आई विल क्रिएट एन 18-month रिजर्व.
ओके,
दैट्स ऑल. नो अदर एसेट. गोल्ड बाय आउट ऑफ चॉइस अगर लेना पड़ता है तो गोल्ड. एंड somehow gold has surprised you when you see the data. And gold only in India, so there are 2 gold asset classes, one international gold and one Indian gold.
yes.
They are, I mean 1980 and 2008 gold prices was $850 an ounce. But India में 80 or 2000, if you ask an American or a European housewife, she's not made money in gold. Though they go to diamonds and all. So, okay. But if you ask an Indian housewife, 1980 में मेरी शादी में ये था, 2008 में this is the price. So Indian gold is a separate asset class. We should do some research on that. So I think we are buying dollars.
Yeah, it's this thing. You have to convert it into the right currency, and that's
वो dollar asset है.
Yes.
Gold. So even if I am a Buffett, fine, and Buffett doesn't like gold, but being an Indian and as an asset class, you should do that.
Sure.
And asset allocation fund is my flagship product in my client's lump sum portfolio since a very long time now.
What's the best advice you got?
What's the best advice I got, sir? There are many. So Warren Buffett once said that it takes 20 years to build a reputation.
Right.
And 20 minutes to
destroy it.
So reputation is gold, as he tells his people कि कुछ गलत हुआ है तो मुझे पहले बता दो. And if you err on ethics, I will not tolerate it. But if you make a financial loss, I'll tolerate it.
Nice.
So I believe it's our goodwill that brings money, sir. In our industry, it's goodwill. So that is the best advice. We'll do a quick fire and close it, sir. So Indian equity versus in any international equity, any other geography. Which one you prefer?
Right now, Indian equity.
Okay. Mutual fund versus physical asset like real estate or gold?
Mutual fund as the first option because of the simplicity, convenience part of it. But if the other asset classes satisfy a need of yours, you should look at it.
Rupee versus dollar next 20 years?
I think yet the dollar.
Even for the next 20 years?
Yeah.
It will still be a reserve currency?
I think so, because there is no option.
There's no alternative.
Yeah.
So that's why Bitcoin and something is coming. But I mean,
we did a lot of research on this. Unfortunately, there is no other alternative.
And that's the only thing which is keeping
that's the
US
only
up.
thing I think, because logically, if there has to be an alternative, then it should be the Chinese currency.
Which
but worldwide there is no trust on that.
No trust. People are not going to trust.
If the trust is not there, you can't become a reserve currency.
So maybe something else. See, I mean, if
it's
pound, if somebody had asked you
again, we have gone into this thing. So look, way back in the 1970s, you could have gold as a reserve currency. Today, the size has become so large that fundamentally you can't even have a metal which can cover that kind of thing. So so it's tough.
So in fact, Saurabh, I had asked that question to Warren Buffett.
Sure.
That Richard Nixon removed the gold standard.
Yeah.
Was he right or was it wrong? And there's a 20-minute reply by Warren Buffett to that question.
Yeah.
I was very fortunate that.
Yeah.
Listed equity versus angel investments.
Listed first. 90% should be in listed. If you want to play around, then play around with the 5-10%. But please understand that there the outcome is very, very binary. As
Either
well
a
as
0 or a 1.
And the timelines are very, very long.
And the exit is not easy.
The exit is not at all easy.
Okay. Fine. We are done. Thank you, Saurabh, for your time. It was such a pleasure. You accommodated at a very short period. And I am 100% sure the people who are knowledge seekers, not the influencers type, they are going to benefit from this conversation.
Thank you.
Give me the liberty of calling you a couple of months down the line for a round 2 of that.
Done.
Thank you. Thank you for being on AUM Finance Podcast.
Thank you.
Thank you, sir.
Thank you for listening to the AUM Finance Podcast. Remember that all investments are subject to market and other risks, and one should read offer docs and other documents carefully before investing.